To remain updated with the latest business news, click on the bell icon.
Hi, folks. You're joined in on Business Today. I'm Sakshi. Well, today is the last day to participate as a retail investor in the upcoming TCS buyback, which record date is set on the February 23rd. Now, remember, it's an 18,000 crore rupee buyback, which means that the companies will be buying back the shares from shareholders at a price of 4,500 rupees per share. Now, this is about 21% premium from the current market price of around 3,708 rupees, 3,709 rupees per equity share. So does it mean that the retail investors can actually get to make a quick buck, make quick return on TCS shares by participating in the stock market of almost 20%? Well, yes, technically, but what are the contours of this? And, how does a buyback happen? Why do the companies really come out with the IPO, with the buyback? That is something that is what we are going to be talking about in this video. Now, remember, 18,000 crore rupees is what you need to remember, which is the size of this buyback at 4,500 rupees per equity share. But what exactly is a buyback? Remember that companies with excess, cash on the books, with no imminent intention for acquisitions, can actually go ahead and buy back. Now, what does this do? That also, improves the image of the company, and it reflects that the company believes that shares in the stock market are still undervalued, and it is willing to give a premium to buy back its own shares to make it highly valued as well. Now, remember, share buyback is a corporate action. Companies buy back their own shares from the shareholders, and this is usually at a premium to the prevailing to the prevailing market price of their shares as well, which is also happening in the case of TCS. Remember, TCS is the largest IT company by valuation in India, one of the world's largest providers of IT services as well. And this buyback is slated to provide further positive image for the company in the market. It also signals the management belief that the company's shares are undervalued. Moreover, it points towards enough cash available with the company to meet its capital expenditure and interest payment obligations as well. Now, as a result of the buyback, the number of shares outstanding into the public market also reduces in the market, and consequently also increases the earnings per share, or the EPS as well. So that again is a positive for the shareholders of the company. Now, short-term retail investors could definitely potentially benefit from a trading opportunity by tendering their shares in this buyback, and earn up to about 10 to 20% as per experts. Now, it definitely sounds interesting, but how does it really function? So look at this as a short-term opportunity for retail investors. At the outset, let us be very clear that this opportunity is only for the retail investors which hold about up to 2 lakh rupees worth of shares of TCS as well. Now, the quota for retail investors is always reserved at 15% of the total buyback. So right now, of the 4 crore shares that will be bought back by the company, 60 lakh shares, or 15% of the buyback, is reserved for the retail investors. Now, if we look at the past instances as well, we have seen number of times that TCS has announced its buyback in the past as well. Now, in the past 3 buybacks per se, 2017, TCS announced a buyback of 1425 rupees per share. This was at a premium of 14% to the then market price as well. 2018, again, TCS announced a buyback. It offered to buy back shares at 2,100 rupees at a premium of 14% again. Now, again, in 2020, when TCS announced a buyback at 3,000 rupees per equity share, this was at a 10% premium to the then prevailing market price as well. Come to now, which is the current market price, is around 3,709. So the premium is highest so far in the last 3-4 odd times, and it's placed at 2021 odd percent at 4,500 rupees per equity share. Now, in the past, we've also seen, instances when retail investors have got 100% acceptance, that whatever shares they offered or tendered, they got accepted as well by the company when they tendered their shares in the TCS buybacks of 2017, 2018, 2020. Further, the stock price of TCS also has touched its buyback price before the tendering period as well. So that also gave a fillip to the stock market price very, very soon after announcing of the buyback. So what should really investors do is the question right now. Should you be really participating in the current buyback for which you have only today's date? Now, retail investors with a long-term perspective, experts say you should still hold on to the company stocks because the prospects for the company's growth going forward in the long term are still quite robust. Now, if you can hold on to the stocks, not tender them now, there are highlights from experts and from brokerage houses reports that there is a strong demand environment for the IT services. Cloud remains as a key growth driver as well. Edelweiss Research, for example, in a note has said that TCS has delivered strong growth numbers. Overall pipeline also remains quite robust. So they do believe that the demand for the core transformation remains quite strong, and coupled with the exemplary execution that TCS always talks about, is likely to drive stronger earnings going forward as well. So overall speaking, the stock market performance will also rise in tandem with the growth prospects of the company, which experts and brokerage houses like Edelweiss are very bullish on right now. Investors who would tender their shares in the buyback would get the cash benefit now of 10 to 20% jump. However, they might lose out on the long-term benefit that the company may have in terms of dividends and capital appreciation and the growth as well that comes in the future as well. Now, TCS has outperformed its peers in 2022 on the back of buyback support, with the other top four IT companies which have declined anywhere between 10 to 25%. TCS has remained almost flat. Consequently, TCS has become more expensive than the other peers as well, trading at 29 times FY23 earnings. Now, when you compare this with Infosys, say, for example, which trades at 25 times FY23 earnings, experts now believe that while buyback potential is attractive for TCS in the near term, for sure, you may see in terms of the price appreciation suddenly coming because of the announcement of the buyback. But after the event is over, you may see some lagging behind as well. So there are both sides of the coins. You need to decide for yourself and speak to your financial advisor now that which side of the coin are you? Are you an extreme long-term investor of TCS? Then most of the experts and brokerage houses believe that the long-term prospects will be still too strong, and you will be continuing to benefit from the growth prospects that TCS may have. So rather not to get into the lure of 10 to 20% increase immediately in the short term and stay put with the stocks that you have in your portfolio. On the flip side, if you're a very, very short-term trader or an investor looking for short-term gains, then definitely it is an opportunity because you may see a sharp jump in the near term because of this price, and you will get the company will be providing you 4,500 rupees. They will be giving you, so that kind of a 10 to 20% jump is definitely that you can explore. Most of the experts believe after this short period of a jump, there may be some lag in TCS shares after the buyback as well. Well, that's as far as the TCS buyback is concerned. Do get back to your drawing board with financial advisor to understand which way will be better for you to be as far as the TCS buyback is concerned. Thanks a lot for tuning in for now.
If you like the video, do like, comment, share and subscribe.